I'll request just switch off your volumes. Okay. Uh, we start today's market talk. Risk comes from not knowing what you are doing. So this is for all those who are betting on products like options or futures, etc., without understanding this issue. This is a very nice, wise line given by Mr. Warren Buffett. And if you see, the rally in the second half of 2023 has been due to expectations of low inflation, rate cuts, and pickup in rural demand in India. Because it was expected if there is a fall in interest rates, the demand in the rural areas of India will pick up. Now, expectations of falling global interest rates would also help in improving export demand. And in addition, there is an expectation of political stability, which would bring back private capital expenditure, and the private sector would be, with the continuation of the policies favoring the private sector, they would be ready to do capex and all that. So this is the basic reason why we have seen there is a rally in the second half of FY23, which we have seen from March, April onwards, when there was a first sign of a rate cuts taking place, when the RBI for the first time had halted the rate hikes. Otherwise, the economic and geopolitical climate is full of uncertainties, and it is prudent to be cautious as we ride this rally. Though you would have heard a lot of cautious tone, but it is always good to be cautious. Now, coming to the market setup as I see it, uh, is the Goldilocks 2024 scenario of soft landing with low inflation still intact? So that is the point, and how much is already in the stock prices. In my opinion, the continuation of the government in India for next 5 years is already in the price. So that has already been discounted. A rate cut in US in the month of March is discounted, and probably 4 to 6 rate cuts in the US are already discounted. So in case there is any kind of setback on these issues, the markets will correct. Right now, investors are overweight on stocks, bonds, commodities, real estate, cryptos, gold, everything. Now, everything cannot go up together. So, it is good time to be happy, but nervous also should be. We should be nervous because we're not sure about the timing of the next correction. The two key drivers of the market are earnings growth and liquidity. Liquidity comes in once there is a interest rate cuts and the easy money is available, and there are earning growth. Now, if you see the Nifty EPS for FY24, it is expected to be around 1000, and for FY25 at 15% growth rate, it is expected to be at 1150 with an earning growth of around 15%. So at 19 times 19 times FY25, the fair value should be around 22,000, which we would reach now. So anything beyond that, we will go beyond 19. So we can always go from 19 to 20 times forward earning. So it's a fair valuation right now. Uh, Geopolitics has sent an early signal that it continues to be a problem, with attacks on ships in Red Sea leading to a surge in shipping cost, and it will also create a surge in the insurance cost of people who are sending shipments by sea. US non-farm payrolls for December came in far better than expected. The unemployment rate came in lower than expected, while average hourly earnings rose more than consensus. That led to a drop in the probability of a Fed rate cut in its March meeting. So, what the strong jobs report is pointing to is a decent growth. It raises expectation of inflation remaining high and dampens expectations of a rate cut. While market is expecting nearly 1.5%, that is 6 rate cuts of 25 basis point each in this calendar year in the US only. And once the US starts cutting rate, others will also follow. While coming to India, strength in the economy and acceleration of momentum has led to India's National Statistical Office to forecast real GDP growth of 7.3% in 23-24, that is the current financial year. And the composite PMI accelerated to 58.5 in December from 57.4 in November, which is very good and much, much better than rest of the world. Nominal GDP growth is estimated to be 8.9% in 23-24. Now, that is very interesting if somebody analyzes that issue, because then if the nominal GDP is expected to grow at 8.9% and inflation and the real GDP is expected to grow at 7.3, then what is the rate of inflation? 1.6%. So there is some disconnect here. But the budget assumption was 10.5%. So government may have to curb spending to keep the fiscal deficit at 5.9% of the GDP, because the budget expectation was higher rate of GDP growth, hence nominal GDP growth. So there may be a cut in the government expenditure, which is driving the PSU rally. So that is one issue. Now coming to few stock, Ujjivan Small Finance Bank has been showing steady improvement in performance. The loan book grew by 27% year on year. Management is confident of 25% growth in FY24 in advances. Credit to deposit ratio is now 83%. But it is also basically because they are offering higher rates in term deposits, while CASA has come down. Asset quality has improved. ROA is above 3%. It's fantastic. Reverse merger of Ujjivan Financials with the bank will be a positive catalyst. The FY25 expected book value is rupees 33.4. So this is at 1.7 price to book, and still there is, in my opinion, at around 59.60, which is the current price, there is still some value in it. Cera Sanitaryware is a prime beneficiary of the upswing in the domestic real estate market and a secular home improvement trends. They did a 11% revenue growth and in H1 of this financial year, and EBITDA margin was at 16%. Faucetware is likely to drive growth along with tiles. They are targeting 3,000 crore revenue in next 3 years. And the presently in FY24, the revenue is expected to be around 2,000 crore. So nearly 50% revenue growth they are targeting over next 3 years. EPS should be around 220 in FY25, and the stock has corrected to around 200 EMA of 7,800. But the other issue is that the competition is intense in this segment, so one has to take their call, but it's a good quality stock to be held in portfolio. EVs and digital solutions and advanced electronic solutions should be the new growth avenues for Bosch. Their performance of Bosch is tied to the commercial vehicle sector. All medium and heavy commercial vehicles and light commercial vehicle segments are experiencing robust demand due to infrastructure development all over in India. They have an opportunity in buses also. They aim to increase their localization rate to 95% in next 4 to 5 years, which should help the profit margins. They have 75% market share in diesel injection systems. In e-two-wheelers, it is developing motors, power electronics, etc. FY25 EPS is around 830. So at 27 times in the present price, it is still at discount to long-term earnings P, which is given to it of around 30 times. So there is still some value left here. Okay. Let's see certain technical charts. Because of these recent jobs data in the US 10-year yield is now, it came down to 3.8 and now it is showing an upward trend, and it has crossed the 20 EMA from bottom, and now it's crossed to around 4% plus. So watch this space. So I think it will retrace to somewhere around this 4.17 or some level, and from there, depending on the statements and other issues, it will move. But it is on the upward trajectory now. What it will lead to is that it will lead to correction in the tech stocks in US. Now, Brent crude, this is the level I was watching, around 70. So it is not going up, it is not coming down because of this Red Sea issue. But if there is a lack of demand, so it is not able to go up. So this is positive for all the crude related stocks. Dollar index, this is a weekly chart. So last week was positive. It bounced back from the around 100 odd levels. Now it has reached 102 level. So if the dollar index goes up, it is negative for commodities. Gold, again, the same thing happens. This is related to dollar index. So if the dollar index goes up, then the gold corrects, and it had a correction. So it has closed at around $2,045 to an ounce for this week. So it had a negative week and it corrected from there. But in my view, long term, this 2070 odd level is that major resistance, because here it starts becoming expensive and it comes down to this level. This is already formed 4 or 5 tops here. S&P 500 has stopped its 10 weeks of upward trajectory and had a red candle. So it is expected to correct now, because that narrative of yields correcting is now not taking place. Similarly with Nasdaq, which again had 8 or 9 weeks of positive returns, but now it is correcting, and this has had a bigger correction because there's too much of uh, positive narrative which is put into the price of those big 7 US stocks which are related to AI and other issues. And now there has been uh, I think there is a forecast is lower sales of Apple in the US, and Apple has been correcting, and because of that, Nasdaq has also been correcting. So I think, and this once Nasdaq corrects, the Indian IT sector also corrects. India's 10-year yield, again, it is at the similar level, 7.2 or something, or it is also waiting for a signal as to on the rate cuts and other issues. And so right now there is no signal, so it is just stagnating at those levels. Okay, this is the Nifty weekly chart. So if you see in this week, it formed a kind of a doji at these levels. It went up and it came down, but it then closed at the similar levels as the last week. So this is a kind of doji which was formed on weekly charts, indicating indecision. Uh, let's see the daily charts. Now, in this, we formed another swing low last in this week now for Nifty. So in this week, it's a daily chart. So we formed another swing low, and so this is if you take this as a swing low, this was the last swing low, and this was the 20,800 odd was the last 2 swing lows. So generally, those who are trading, for them, if Nifty has to correct, it trades to around 2 swing lows. So roughly, these level of 21,000 should provide a support. Now, if you see here, these were those uh, 3 good days where this was when the uh, electoral victory thing was start getting priced in, and we had gap ups here in India, and then this was where the exuberance was due to rate cut. So if in my opinion, in case the rate cuts get negated and there is no rate cut in March, and there is some bearish commentary or this thing, then I think the Nifty should come down to around 21,000 levels. But on the daily chart, if you see, the 20 EMA is at 21,335. So that should be a decent support. But one good thing is, if you see in the weekly chart, all all swing bottoms are higher than the prior ones, ensuring that the trend is not disturbed. So which is a good thing, uh, because the low of the previous week has not been broken, and we have had higher highs in for 10 weeks in a row, so which is very positive. Now, coming to the hourly chart, so as I was saying, the 40 EMA should provide a support. It had broken below that, but then it went above, and right now it is tested that it is above that. And from the retracement here, which took place on around 20th of December, Nifty has bounced to it went to around 38.2 2% retracement, and then it came down. But for a uptrend to continue, it would have to get through this 61.8%, that is around 21,985, that is roughly 22,000 levels. So once it crosses this, then there would be a clear sign for the bulls that they are back in the game. So it has to retrace to that level. Till that time it is not retracing, it is in that right now no trade zone. This is the option data. So if you see, this is the Nifty option data for the next expiry, that is next week expiry. Now if you see here, the maximum call writing is at 21,800 and the maximum put writing is at 21,500. So these two, 21,500 and 21,800 plus minus 50 points should provide the basic area for trade for Nifty in the coming week. So Nifty should trade within these two levels. There is a call writing all over at 22,000 and at 22,300, and there is put writing at lower levels. So how it works out from here, we'll see, but it seems like there is no great put writing or call writing at any one direction. So it is a right of kind of indecisive right now, which is reflected in that candles chart also, which was made. Now Reliance here, it has broken through that last stop it made in the last week, and now it is, so if it is trading above this 2,600 odd levels, then it should be positive and should lead the Nifty up. And if you see, it has had a continuously positive weeks now, despite Nifty being indecisive. So this was one which was positive stock. LNT is the another one. It is constantly trading, if you see on a weekly chart, above the 20 EMA, and it is looking pretty strong on this, and it is also providing support to the Nifty. The other one which is providing support to Nifty is ITC. So if you see here, it was declining here, and then it has broken out from there, and even last week was positive. So this is another stock which is providing support to the Nifty, that is ITC. Nifty Bank, if you see, this is a weekly chart. Again, there's a it had a red candle and it kind of made a doji. So it is again indecisive because it is moving to and fro. So so this one has to be careful. But till the time it is trading above this 20 EMA, it's okay. And if you see on the daily chart, is the same thing, undecided this thing, and this 20 EMA and 50 EMA should be the levels to watch. And if you want to trade, you must look for these levels and then go long. Otherwise, the chances of making a mistake are very high. The reason is because of this is a weekly chart. So HDFC Bank had a negative week. It is going to this resistance band from 1720 to 1760. There is a big resistance band where it has gone 1, 2, 3, 4 and fifth time, and it has been correcting from there. So this resistance band has to be breached, and there has to be some good FI buying for it to go through this. Otherwise it will correct to its 20 EMA, which is around 1600, and 2 take support, and then will again start moving. Now ICICI Bank, the same issue. This is the trend line which is going up. It went up, tested that trend line, and then reversed from there. Now here, the 1,000 odd level is very important because it has to trade above that for some positivity. Below 1,000, it's a weak, and you have to see it can go up to this 966 odd levels, which is the 20 EMA on weekly chart. PSU banks continue to be positive and have last week broken through the rising trend line, and they are expected to do well because of even the first few results which have come, like Bank of Maharashtra and all. Results have been very positive, and that is what is reflected in the PSU bank chart. Now the stronger chart here, again it has broken out, is SBI, but it is halting at these 640 levels. So if it is not able to take out this 650, 660, that previous high it has made here, then it should correct. It will correct to the 600 odd levels and then take support from that level. So right now it is in that no trade zone right now because it is not showing any momentum. PSE index is very strong, and if you see, the public sector enterprises are doing well. And the basic reason all public sector enterprises are doing well is because these are monopoly businesses, and there is a reflection is that there is going to be continuity of earnings over next few years. Hence, people are giving them higher P multiples. One of the stronger stocks among them, which started moving from August, September onwards, is Coal India. It has from around 230 to 40 levels. It has gone to around now 380 and expected to go to 400 odd levels. It's a strong stock, and with improving performance and good fundamentals, the technicals are also supporting. So it's making good weekly tops. So it's one good stock to hold. IT index, if you see here, it had a negative week. It is basically because the Nasdaq was weak, and now people are slightly worried about the outlook for IT over the next with the Infi and TCS results coming on 11th of January. So if it results are bad or something like that, then I think the first level of support would be this 38.2% retracement level, and from there we will see. But or if the results are okay and the guidance are good, then it may test its previous highs. So it can go any direction. So better to be cautious and take and watch the things carefully. Infosys, it had a from a symmetrical triangle, it had a breakout, but again the breakout seems to have failed and it is now correcting. So let's see from here. It is now people are on wait and watch mode, and it is people are better. People will look to be careful, and it has had a big rally from that 1200 odd levels. So it has gone up nearly 300 odd rupees. So right now people will be cautious with Infosys. One of the IT stocks which has done well and which I had covered few weeks back is Newgen Software. It continues to make fresh highs. It has reached around 1600 levels. Last quarter, when the results came, when the results were good, sorry, it was at this level, around the 920 odd level, and then from there it has moved up around 600, 700 rupees, and now it is expected to perform well. The Midcap index had a positive week. It is basically because one of the reasons was that probably a lot of new NFOs were launched in end of the year by all the mutual fund houses, and then these people have deployed their money. So the mid caps and even the small cap index was doing well, and they had a positive week. So because the broader markets were performing, and there is more liquidity coming here. One of the stocks which is had a strong week is Biocon. Now it has reached its 200 EMA. It was floundering, and the 20 EMA, 50 EMA was trading below the 200 EMA. So now it had a positive week, and it has gone and is exactly there. So if it goes above this 200 EMA, then it will be a breakout for this, because basically they are getting into a lot of good things in their various arms. The other stock which is looking strong is Olectra greentech. It has tested its all-time high it had made in July, and it has now taken support around the 20 EMA on the weekly charts, and now it has tested the all-time high. So we'll see what happens to it from here. This is again, a lot of new orders are coming and all for the electric buses and all. So this is a strong stock along with JBM Auto. The other stock which is doing well is RBL Bank. It is a daily chart. So if you see, it was having a declining trend line, making lower lows and lower highs, but it has broken through that, and now it is heading higher. So this is a stock to be kept in mind. At least it is good for trading aspects. Now the few stocks I will cover today. One is Global Health, which is also called Medanta. It is focusing on increasing capacity at North and Central India as it intends to deepen its presence in these markets. You know right now that healthcare is a very important aspect which everybody is focused on, and it is a direct beneficiary of increase in health insurance. In first half of FY24, Medanta had a total bed capacity of 2725 with mature hospitals which are working over a period of time, that is at Gurugram, Indore, and Ranchi, contributed 65% of this capacity, while the developing hospitals in Lucknow and Patna contributed the remaining portion. It plans to expand the total capacity to around 3,500 beds over the next 2 to 3 years. Greenfield projects, which they are constructing fresh, are expected to add 1,000 beds, while Brownfield, where they are reconfiguring the existing facilities, are expected to add 552 beds over the next 2 to 3 years. It is doing a joint venture with DLF to set up a 400-bed hospital in Greater Kailash area of South Delhi. So, what has happened with Medanta is, if you see here, uh, the income is growing up every year, and the change in income from operations is roughly in 20% category now for FY24, and margins have also improved now, and it is regularly improving, and it is expected to reach around 25%, which is very good, basically because of average revenue per occupied bed they are going to make here, which is increasing now. I think it is around 70,000 rupees now, and with increased amount of health insurance, etc. And there is an improvement in profit. So FY24, the profits are expected to go up by around 48%, which is decent. So if you see here, over the last 3 years, the profits have nearly become uh, 10x in the last 3 years. It is basically due to efficiency and operating leverage coming into play, and more emphasis on health. They are adding beds, as I brought out, in Noida, Indore, and South Delhi. So average revenue per bed is expected to see a 6% CAGR over the next 2 3 years. The Noida hospital, which they are creating, is strategically located to cater to West UP patients and is in close proximity to the metro station also. So that is again a advantage. The South Delhi, that is in the Greater Kailash area facility which they are providing, will will give a boost to their presence in Delhi NCR area. It is going to be a super specialty hospital. Indore, which they are creating, is expected to become a medical hub for Madhya Pradesh, because Indore is that happening town of Madhya Pradesh, and they are increasing the bed capacities in their hospitals in Lucknow and Patna. So you can, it's reached around 1,000, and I think the IPO came at around 360, 370 rupees, and you can still see a 20% upside from here, because those hospitals which are existing are already well matured, and people are subscribing to them. Now, this is their expected EPS growth. So if you see, they're expected to do an EPS of around 18 rupees for FY24 and 21 odd rupees for FY25. So 50, 60 times they have been, like, if you see, they have been trading. Even this year they were trading at around 80 times. So at even 50, 60 times at 2021 EPS, they should trade at around 1200 rupees. And the ROE, ROC, ROIC, everything is improving. The all the working capital ratios are better. The leverage ratios are better. So the net debt has gone down. So net debt to EBITDA and net debt to equity is now zero. So there is no debt and all that. Now, this is about their bed capacity they're adding. FY23, this was the total beds 2697, and mature hospitals were 1766, and developing hospitals were 931. And in FY26, it is expected to reach 3577 total beds. Mature hospitals will be around 1896. The mature hospitals are Gurgaon, Indore, Ranchi. Again, important areas, because Gurgaon caters for NCR, Indore for MP, and Ranchi for the belt which is there in Bihar, Jharkhand. And they are developing hospitals in Lucknow and Patna. seeing the demand, and upcoming hospitals in Noida. So that will again going to be 300. So there is going to be a good visibility of revenues and profits for them. Now, if you see the valuations of various hospitals, if you see, this is Apollo, Max Health, Medanta, Fortis, Narayana Hrudyalaya, KIMS, Rainbow, which is a children's hospital, and Yatharth. So if you see there, and that this is the current market price, and if you see the EVs generally for FY24, it is Medanta is slightly lower than those Max Health and Apollo, and though this Narayana is still cheaper, and this is again I had recommended few at months back when it was trading at around 1,000. Now it has also reached 1,200, and Kims and others are trading slightly lower. So this is for EV EBITDA. So it is going to go down only. And the PE, right? If you see here, Apollo is pretty expensive, and these are trading at much lower valuations. Why Medanta is preferred is because of the it's super specialty hospital and basically for cardiac and other support for Dr. Trehan's and other issues, and the ROEs are expected to improve. So have some few of these stocks in your portfolio uh, for hospitals, because there is a longevity of earnings visibility in these hospitals, because this is not that cyclical business. This will continue. Something or the other will happen. So that's why these are the good and safe businesses to have. So if you see the chart, it this is where in November 23, in November 22, it had listed at around, I think, 400 odd rupees, and it has gone up from there. So it has become around 2.5 times. So it has now reached 1,000 odd. So I have held this stock since listing. I think the IPO was at 350, 360. So after that, it's a continuous rise, and it is always traded above the 20 EMA. So it's a stock to be held and bought on all tips. The other stock which I'm going to talk about today is NTPC. Now, there is a surge in power demand, particularly during non-solar hours. This has resulted in resurgence of peak deficits, once again bringing the power sector into spotlight. Its thermal capacity is largely backed by long-term PPAs, usually up to 25 years, uh, which provides long-term cash flow visibility. It is transforming from a power generating company to an integrated energy company. Thermal power plants have consistently operated above the all India average plant load factor with a remarkable spread of 10%. So it is able to operate the plants at higher plant load as compared to other plants. The reason is the advantage of diverse plant locations, coupled with approximately 62% of its plants being situated near the coal pit head, enhancing the performance of NTPC's power plant, because they were never having any problem of coal shortage or something like that. They are doing 20 gigawatts of conventional capacity addition. The target is around 60 gigawatts of renewable energy portfolio by FY32 to achieve a leadership position in green hydrogen technologies. They have already formed a joint venture with Nuclear Power Corporation to set up a plant. Plus, because they are having a sovereign support of the government of India, because President of India holds 51% of the stake in this stock. So they have a lower cost of debt, which is 6% versus 7 to 9% compared to the private thing. Hence, their cost goes down. Provides NTPC with a competitive fundraising ability for new thermal and RE projects. Uh, if you see NTPC, this is their sales. This is in crore. So they are expected to do around 2 lakh 8,000 odd crores of net sales in FY25, and with the EPS of around 28, 29 rupees. So they are trading at around 10 to 11 PE, which is pretty inexpensive if you see their revenue visibility over a long time and the requirement of power. EV EBITDA is declining, which is good. It shows that it is becoming less inexpensive. and the ROE is improving, so it will help the profitability. It has 17% of the India's installed capacity and 25% of the total power generation in FY23. So 17% of India's capacity, and it produced 25% of the total power generation which was took place in India in FY23. That means it is more efficient than the other plants. As I told you, it has a cost plus business model. So that means they would be profitable in any power cycle. They are doing new ventures, as I covered, for green hydrogen, energy storage, nuclear power, and round the clock power generation for renewable energy, etc., which provide them with a good growth potential. I have covered their EPS. They will produce around 34 metric tons of million tons of coal from their own mines in FY24, and they would increase it to 70 million tons in the next 4 to 5 years. So that gives them a visibility of availability of coal. So that's why their plant load factor is pretty high. They also give a stable dividend of around 4 to 5%. What they are projecting is that, if you see here, this is the existing 70 gigawatt is their conventional thermal energy, and around 3.3 gigawatt is the renewable energy, and they're expecting it to this one to go to around 90 gigawatts and renewable to go to 60 gigawatts. Healthy ROE and ROC to support cash flows, which is expected to remain in that 15% of zones. So the total capacity they are going to add from their current capacity onward. So it is expected to reach 130 gigawatts plus by 2032, and RE capacity is expected to reach around 60. So it should reach actually higher. Only problem is the execution part. They are also so that means what they are aiming for is that 40% of their share of power production should be from renewable energy by 2032. They are also doing 14 gigawatt of pump storage projects. Pump storage project is when you take two water reservoirs and move water from one to the other and then generate electricity. They are also doing a 5 gigawatt electrolyzer capacity for green hydrogen by FY30, that they are trying to create that capacity for green hydrogen. They are also doing a test project of 1 megawatt as the first green hydrogen project in Kawas in Gujarat. They are likely to produce this green ammonia, urea, and methanol. Green ammonia is basically used to transport the green hydrogen. So you produce it, convert into green ammonia so that it can be transported. And they are doing around 4.2 gigawatts of nuclear project. So this is their SOTP based valuation which somebody has done. So as per that, it should be trading at around 345 rupees. So it's at around 10 to 12% discount right now from the SOTP valuation, which takes care of its thermal, renewable, the work in progress, and the other issues and cash aspect which have been included. If you compare it with its peers like Adani Green, JSW Energy, NH Power Grid, Tata Power, Torrent Power, etc., with its EPS and all that, it is trading at much lower price to book or PE as compared to others. So if you can see, it's around 10 PE, and you can see Adani Green Energy EPS of around 10 for FY25, and it is at 1600 odd rupees. So you can compare that. And the easier comparison is with Tata Power, where it is expected to get an EPS of around 12-13 rupees, and it is at I think 320 something, 330 odd rupees. So you can see it is comparatively cheaper and a bigger company, higher market cap company, around 3 lakh crore market cap, and it is least expensive with better visibility of earning growth because of requirement of power. This is the chart. Now, if you see, it took off last year from 160 or 170 level. and now it has reached 315 odd levels, and it is constantly trading above the 20 EMA. And so every dip is a buying opportunity. And generally, what happens I've seen is that at the time of results, the results are never as per expectation, and then it takes a dip. So that's the best time to buy and then hold the stock for longer duration. The last stock which I'm going to cover is BHEL. Again, it's a big time underperformer. Total order intake has surged to one is likely to surge to 1.8 lakh 1.8 lakh crore during FY 24-26. That means over the next 3 years, which is nearly thrice the orders in the 3 years preceding FY 24. It is strategically transforming itself into a diversified engineering company focusing on fast growing sectors such as railways, defense, and renewable energy, which will drive sustainable long term growth. It is well positioned to win, and I think this is they will get this because L&T has, I think, withdrawn from this 3.800 megawatt 3 into 800 megawatt Talabira project planned by NLC. 20 gigawatt plus are expected to be awarded in the next 2 to 3 years, of which BHEL is favorably placed in 3.7 gigawatt hour worth orders. 6 gigawatt worth of projects are currently under bidding, and an additional 9 gigawatt worth projects are to be announced in the medium term. There is a very limited competition in the power equipment manufacturing space. BHEL stands to meaningfully benefit from this opportunity. BHEL and Titagarh Wagons Consortium won the Vande Bharat order to supply 80 train sets along with associated O&M and operate, that is operation and maintenance. So it's a long-term contract which they got. Defense is an emerging growth driver, and coal gasification, that is where they are pioneering the clean technology. So this year, if they get this order of Talbira, which is around 19,000 crore, it should have an order book of around 60,000 crore. Uh, and 5x, it is projected to do earning growth over FY 24 to 26. And if you see here, this is in million. So roughly in FY 25, it is expected to do around 33,000 crores of revenue. And within, so the order book per year, what they're getting is 2x of the kind of revenue they do. And there is going to be major improvement in their EBITDA and EBITDA margins and other issues. So the profits also is expected to improve. So if you see the EPS is FY 25 and 26 is expected to nearly become 3x from, and then from FY 24 this year's EPS is expected to become 4x now in FY 26. So the valuation, if you see here, is going to be around 35 times right now for FY 25 and 20 times 21 times for FY 26, and rest are improving. So EV EBITDA is going down, which is good. EV to sales is going down, and EBITDA margins are improving and expected to reach around 10%. ROE is also expected to reach around 10, and ROC around 14%. So it is expected to do well. So if you see there, the FY 26 EPS of around 8 to 9 rupees, 25p you can give it easily. So it should trade between 200 to 225 rupees, which it has already reached there. So right now it is consolidating. In railways, they have manufacturing capabilities across locomotive, coaches, and propulsion systems, steam and gas turbines for ships. So that is their defense part, armored vehicles, missiles, etc. They have also developed thing called PFBG, which is pressurized fluidized bed gasifier technology, which is most suited for coal gasification for high ash coal. India has high ash coal as compared to rest of the world where it is a low ash coal. So converting low ash coal to gas is easier. So that they have developed, and healthy order inflows will keep order book at 4x of trailing 12 months sales, and operating leverage should boost the EBITDA margins, as I brought out, to around 10%. So this is their chart. Now, this is the monthly chart over so many years, 2007 onwards. So 2007, it had gone to around 360 levels. and from there it has corrected, and it tested this 200 odd level and then came down from there. So this is a important resistance this stock has. It had a vertical rise, so this is the important resistance. I think one odd good news will take it above that. So people are projecting around 225 to 30 here, and after that we'll see. So till the time the performance is maintained and order books are flow, this is a stock to be held. Only problem is results are always below expectation, so that is a big risk. So I finished. We'll take questions now.